Hear you loud and clear. Good, good, good. Let's go. All right. Hey, guys. So I'm going to try to do some of these YouTube live updates, this kind of stuff periodically to talk about market situation, whatever I feel like is going on. I don't have any idea how this is going to go, but we'll give it a shot. If it works, if people like it, then that's great. If they don't, then we'll go from there. I want to answer some of the questions. I said I would answer 30 questions if I hit 30,000 followers. So I'm just going to go down the list. I don't even know how many questions we got. And then we'll see how far we get. And I also want to talk about the market in general a little bit. Let me actually start by going to kind of what I'm looking at in terms of Bitcoin broadly. So I'm going to flip to my screen here. Cool. That seems to be working. So yeah, I want to talk about, I know the audio is only on the left side. Sorry. I have no idea why. I've got a mixing board, but I don't know how to send it to mono. Sorry about that. So, okay. We're going to have some inception there for a second. All right. So let's talk about Bitcoin broadly. I've been sharing this chart for over a month now. I don't remember exactly when I drew it, but in my hopes, I wanted to see Bitcoin do some end of the year consolidation, which it's clearly been doing. I drew a pitchfork that goes back to the lows from July. Usually when you set up these pitchforks, you do a local high and then a low, and then you send the anchor back to a prior low. So like this would make less sense in terms of a traditional pitchfork to like send these to the top of the peaks or something like that. So I've been anchoring mine off of that dip to 1800, and then the top is around whenever we went to nearly 5,000, and then the bottom when we dipped back down again in September to just under 3,000. And all this really does is create some channels that you can then use to hopefully get an idea of what the market is thinking. And when you do a pitchfork like this, it's really just setting some diagonal boundaries. And if you can find one that works, then that's great. And you can use it to your advantage. It doesn't have to be rocket science. You can always, one of the critiques of pitchforks is that you can always change the pitchfork and adjust it depending on the market conditions. So, keep that in mind. Looks like mine is actually fat fingered a little bit here. Should be about right there. So the reason I want to look at this is one, we've been given an opportunity to gain Bitcoin because since we got up here nearly to 20,000, Bitcoin's been in either a downtrend or sideways, and this sideways action, like we see here, is potentially extremely profitable for us to gain more Bitcoin. Our current goal is not necessarily to increase our US dollar value, although it's nice to be able to do that. Our goal is actually to, as much as possible, gain more Bitcoin, and then we're assuming that we will be able to increase our dollar value as Bitcoin goes up. So that's why we're not too concerned if we're hitting our US dollar all-time high or something like that. We're more concerned about how we're doing relative to Bitcoin, because then when Bitcoin's ready to rumble and it goes from maybe the tip of this triangle at 17,000, something like that, and when it goes up, we want to be in Bitcoin for that ride if Bitcoin and alts don't go together, which you never really know. So based on this pitchfork and based on this triangle, which is a consolidation period. Now, some people are looking at the same thing and they're saying it's a pennant, and they're saying we may even have less time like this. In that scenario, it's maybe a little shorter than what I'm showing with this ascending triangle. until this ascending triangle proves me wrong, I'm going to live by it. And there's a couple of moments of possible volatility or rapid price expansion. And velocity for Bitcoin is potentially devastating for alts, whether it's up or down. You can see with the South Korea FUD that caused a relatively large move in the past 24 hours. Alts were punished by that. Also interesting is, based on this diagonal that I drew, Bitcoin dumped below that diagonal and then failed to retest. So it'll be interesting to see whether we fight back up into this channel or if we actually fall down into this one, which would be a little more dangerous. We could end up in the high $12,000 range. I'm using Bitfinex because back when Coinbase went ballistic, there was a really gross wick up here that messed up a lot of the Kumo clouds and that kind of stuff. So I'm using this as my roadmap because as long as it's in, especially this small triangle, but even potentially this larger triangle, that's lower velocity Bitcoin than what we could see. Because what we could see out of this triangle is pretty high velocity Bitcoin. We could go straight from here to here and then bounce around a little more, down like this. Who knows? That's still okay in terms of trying to be in alts. But at some point, we're gonna do some serious action, and this is kind of the moment that I've been looking for personally. And I want to be careful that these gains that we're seeing in alts right now can be maintained. And I don't know exactly when that's going to be, but notice how quickly out of this ascending triangle you would be moving into that high dollar range with Bitcoin. That would be, if you compare this to the ascending triangle that Ethereum had over several months, the velocity out of that can be pretty significant. This would put us roughly in that $30,000 range, also along this median line. I really love the narrative that's created by saying testing $30,000 in that February-March timeframe. So we want to take advantage of this time. We also want to be respectful of Bitcoin. We want to be cognizant of the fact that Bitcoin can shred our altcoin positions and be able to secure those gains so that when Bitcoin does this, we can celebrate it with our gains that we've made over the past month or two. So that's kind of what I'm looking at in terms of the lay of the land with Bitcoin. When I'm considering my altcoin positions, I'm really cognizant of what Bitcoin is doing at a larger scale. So you can look at these on various different time frames. The 4-hour and the 6-hour are two of the lower time frames, at least for my positioning, doing larger swing trade positions where I may be in something for anywhere from a few days to several months, I guess, depending on the position. You can see on the daily, we stopped on the Kijun. The daily Kijun is with doubled settings. Obviously, if you guys know anything that I'm doing, you should be paying attention to Josh Olszewicz as well, Carpe Noctem on YouTube. He does a great job. So you can see the daily Kijun held here. This is also a buying position if you're looking to trade Bitcoin or buy back into Bitcoin with fiat, or if you're looking to trade margin. You could have gone long here from this daily Kijun. We could see retests, either the Kijun, even down in the cloud. Because Bitcoin likes to be feisty, it wouldn't surprise me if we had a fake out at some point and even touched the daily cloud. You can see historically, sometimes there was a grand finale before the big upward swing where Bitcoin did go down into the daily cloud. All of these are still bullish. However, you do want to keep in mind the larger parabola, if you will, at some point that may come into play. This is a very long-term outlook, but what ends all of our fun is if this multi-year parabola breaks. So you can see this curve right here as this curves up. At some point, if that comes out and falls below that daily cloud, below this curve, we could be needing to be on the lookout for alternative strategies going into fiat or who knows what. But until then, we want to enjoy what we've got and the opportunity that we've been given. Right now, you can also see where this correction we've had is well within the correction parameters. Historically, everything looks good. We have no reason to be bearish on Bitcoin until Bitcoin tells us that we should be bearish. So when you see FUD like we've been seeing, the panic into fiat, unless you're really playing short term, is probably unwarranted. So that's the way I'm looking at it. And until then, I'm excited about a lot of different alt positions, kind of no matter what they are. I'm in several. I am looking to consolidate down into fewer positions so that I can manage fewer. Right now, I think I have maybe 20 to 25 alt positions. I may want to be into 5 to 10 the closer we get to the end of that triangle with Bitcoin. So something to keep in mind. That's what I've got on my mind for sure. Now, let's get into the questions that people asked. And I'm going to switch back over to the camera here. If you have questions for me, you can drop them into this YouTube chat. I'm seeing that. Let me switch back over to the camera. So I'm going to try to answer some of the questions. I told people that I would, once I got to 30,000 followers, I would answer 30 questions. That is a lot of questions. We'll see how far we get. I'm just going to start from, let's see. Looks like we have 3 pages of questions. There's 45 questions. I'm going to go to the beginning. If you have additional ones, if the question that you land in the chat is better than the one that I've got in front of me, then that's fine. Fraser asked, what tools do you use for technical analysis, and what are good resources to get up to speed quickly on crypto indicators that are good to use? I'll use any indicator that I feel like can give me an edge on the market. That may be primarily, for me, I'm always going to have the Ichimoku cloud on. If you want to learn about that, go to ledgerstatus.com/Ichi, ICHI. Hey, I see that the audio's left ear only. Sorry about that. I'll fix it next time. Just take one ear out. That's a cloud series that Josh teaches that's extremely good. It's only an hour long. I recommend it for everybody. That is my primary lay of the land tool that I use. The next thing that I use are moving averages. So there's the EMA and the SMA, and I personally use the EMA. There's nothing wrong with using the SMA. The 50 and 200 can be used on a lot of different time frames. I typically look at them on the 4 hour and the daily. I've also been using the 400 a little more. You can see here what those look like. You can see how Bitcoin has been roughly respecting the 50-day moving average. This is also nice when I'm looking at altcoins. Let me think of one. Might as well go shill my own bags. Let's see. See, I track a lot of crap. So you can see in a situation like this, Ubic has just had a cross between the 50 and 200. This is historically a very bullish sign. It's also interesting to me the 50 to 200 and the 100 are all in the same place. It's retested this zone twice. And then when you combine that with something like the cloud, that's also where the Kijun is. So this is extremely strong support around 30,000 on a coin like that. This is also flipping bullish. So finally, this thing is looking pretty bullish. It's got to tackle that orange diagonal resistance. Once it does, then each of these previous local highs will be resistance points, and that's kind of what I'm looking at. If you just use these tools, these are moving averages, the cloud, historical highs and lows as support and resistance, that'll get you a really long way. And then just apply that to different time frames. So I've got it on the daily. Here I can look at the same thing on the 4 hour. You can see everything switches up. Really with altcoins, it's hard to look at anything below like the 4 hour and get really good signals unless you're just trading purposefully on really low time frames. The podcast that I recorded today with Johnny Moe is going to be a great example of doing breakout trading and momentum trading. And somebody like Johnny does go way below the 4 hour time frame. But for me, the type of trades that I'm doing, I may look at the 4 hour or even the 1 hour for an entry, but I'm monitoring on a day-to-day basis with the daily chart. So those are the technical indicators that I use most. They're also really simple. Another thing, I showed the tweet with this recently, but there was a really easy strategy that you could have used recently where you just turn on the 200 EMA, and on a daily time frame, a lot of altcoins had busted through that 200 EMA, and they were either bound to retest it. I bet a lot of them did last night, or that could be where you look for an entry. The 200 EMA is really good support, especially once it breaks through. You should expect that 200 to hold. If it doesn't hold, maybe it's a stop run and it's a wick that goes below. But your stop can be somewhere below that 200, but you have a great profit opportunity if you are essentially playing the move above the 200. And all this is relative to Bitcoin, by the way. So those are the things that I'm looking at the most when I'm doing technical analysis. Crypto Cred, I think he's giving me a hard time, but he asked me, what do I think about 6 hour versus 4 hour cloud settings? And he says that I'm not being true to something, giving me a hard time about looking at the 4 hour or the 6 hour versus the 4 hour. I'll look at any cloud that I feel like can give me an edge. So right now, or not necessarily right now, but recently the 4 hour cloud with Bitcoin was pretty messy. It was well below the 4 hour cloud and I wasn't loving it. Just didn't show me great guidance because price was below the cloud, which is technically bearish. And it just wasn't clicking for me. However, the 6 hour, it was ranging within that 6 hour cloud. So it gave me this concept of sidewaysness that worked for me. You can see when it broke through the cloud, the cloud was thinner. A thin cloud is an opportunity for more volatility. So it just kind of depends. You can look at anything in any time frame. You can use it as confirmation bias, or you can just use it as additional data that can be valuable to you. You just got to figure out what's going to work, and also just using history as your guide, like look back on previous charts. Sam asked tips and advice for traders moving from the stock market to crypto. This is a good one. So I have Sam, like me, is not new to trading, but is relatively new to the crypto space. One of the things that I would say in terms of crypto trading specifically is the market cycle is much more important, and the fundamentals are much less important, unfortunately. And it's not that fundamentals aren't important for long-term trades, but basically anything can pump. It can be a really miserable coin from a fundamentals perspective, but it doesn't mean anything. And of course, this is versus Bitcoin more so than it's versus the US dollar. Versus the dollar, pretty much any cryptocurrency looks extremely bullish because it's gone up. There's so much new money coming into the system. Our goal when we're trading is to outpace Bitcoin. So when we're outpace Bitcoin, we want to chart against Bitcoin. So this is an example of a coin that has these incredible market cycles. And this type of thing just does not exist in the real stock market at this type of scale, because this is increasing and decreasing in value 5 to 10 times over or more. And a coin with history like Blackcoin really gives us more information, which is nice. But for the most part, the stock market gives you better historical information than the crypto space, because in crypto, old is like 2 to 3 years or maybe a little more than that. And in the real stock market, old could be decades, and therefore support and resistance might be a lot weaker in crypto. But the biggest thing would be about market cycles and fundamentals. And the power of the full retrace versus Bitcoin is extremely strong in crypto. Like, it should just be your expectation that relative to Bitcoin, your altcoin is going to retrace 100%. And this, I'll admit, has gotten me stuck before I really learned that lesson properly. One of the really great examples of when that happened to me was with something like Strat. So you can see it had this massive bull market. It looked unstoppable, and then it drew down, and it came down to see this 100-day moving average. And this is a 2-day, so this is actually the 200-day moving average. So for me, coming from a more traditional market, I actually thought like this and this and this. This is 2-3 tests. Really, the third test should have been a sign. It's multiple tests on a 200-day support, and that was a sign of potential bullishness. And really, this was just a massive bull trap. In a traditional market, maybe one, it wouldn't have 10x like this, but it really should have respected that and maybe had continuation. But these alt cycles or alt seasons, whatever you want to call them, they're really, really real in crypto, and it's not quite the same in the regular stock market. So it's worth considering. You can see now, once this bottomed out, it was really at a great distance separated from some of these moving averages. So it was really ripe for correction there. But we're just now getting to more confirmation of a bullish trend where the price is above the cloud, the price is above the moving average. It's retested those. So Strat is pretty bullish right now. The question is, how much time does it have to be bullish, to be in a new market cycle relative to Bitcoin? So when you consider something like this compared to what we saw with the Bitcoin chart, maybe we have a week of that. So like that's not that long, like maybe gets us into this region. And the question will be, can we have a continuation of these bullish altcoins beyond Bitcoin in that triangle? And does that mean like we can do this for another month or another 2 months? And if so, some of these have the opportunity to have a brand new cycle. And the question is whether that can happen, whether that will happen. We'll find out. We need to be prepared for both scenarios. But yeah, I mean, the market cycle is so important with crypto, and it's the market cycle just doesn't exist in the same way with traditional stuff. Joshua asked me, what's my single favorite upcoming ICO? And my answer is, I have no idea. I've been very conservative in terms of putting money in ICOs, so I haven't really done it. I will try to put some money in some ICOs this year because some last year did extremely well. I do think when the timing of the ICO itself, when the coins are delivered, all that matters. Fundamentals in ICOs matter more than in trading alts because you don't have a chart. Really, all you have is the fundamentals, the team, and all that stuff. If they can tell a good story, then there's an opportunity to make money on that. You need to be careful with those, though, because there's more scams than not in ICOs. But I do not have I don't have good advice for you right now. Isaac said, "How do you determine target prices for trades or coins in general?" Josh and I did a podcast on that, so I'm going to just point you to the previous podcast. And basically, we used the cloud and all these indicators, and we talked about those. And then for targets for taking profit, we talked about mostly Fibonacci extensions, and you could also use fractals, which is a default indicator in TradingView, in order to move your stops. So Josh is a big believer in really letting the trade ride until it hits the stop that prevents it from going on. So you never catch the top when you do that, but you don't miss the last run either. So that's worth considering. Erdem said, how much profit are you generally taking before a buy? I think he means a sell. So does 10 to 15%. Is that enough for me, or can I make 300+% from a particular buy? 10 to 15% in crypto is probably not worth the trouble because the volatility on a daily basis can easily be 10 or 15%. There are some people that do really quick scalp trades where maybe 10 or 15% is fine, but you have to put a large percentage of your overall stack in order to take advantage of that. So for me, I really want to see like a 50 to 100% move on your kind of typical trade. Like if I take 50% on something that's relatively short term, I'm going to be pretty happy with that. That's probably where I'll actually start moving a stop or like a mental stop if that's all it is. to say, okay, well, I want to secure that 50%. A lot of people talk about 3Xs and 5Xs and 10Xs and that kind of stuff. And, there's stuff out there like that. There are plenty of 10Xs in the world. It doesn't mean that you have to get a 10X every time. If you double your Bitcoin on a trade, that's really an amazing trade. Like, remember, Bitcoin is incredibly bullish. So every time you make more Bitcoin, you've done well. And you also want to reduce your loss potential. So you need to be cognizant of where you are in the broader market cycle when you're considering something like that. Garrett asked, are there any books that you recommend for crypto trading? I don't have any great books to recommend to you because I didn't learn how to trade in a classical way. However, there are lots of good books. Alvin Lee, One Man at a Time on Twitter, he has a whole list on his website of books. I'm sorry I don't have that link right now, but it is really good, and I think you may enjoy that. So that list, if you are curious. Crypto Potato Chip, your trading view setups, which indicators do you use? We already went over that. John, how does someone starting out in crypto best prepare for taxes? People have differing thoughts on this. I have a post/resource coming out where I'm going to talk more about it. To me, every trade is a taxable event, meaning even if it's crypto to crypto. So if I buy something with Bitcoin, then that's like selling Bitcoin. If I sell something back into Bitcoin, that's selling that alt. So if I sell ARK or whatever, I'm selling ARK, I'm buying Bitcoin. Those are two distinct events. As far as I can tell, in the eyes of the IRS and in the States, I'm personally considering every trade a taxable event. And that sucks, but it's what it is. So it's going to make taxes pretty terrible. But that's something I'm addressing when I get there. I didn't make a crypto trade before 2017, so this is the first year I really have to worry about it. But I'm going to pay my taxes. It's part of the deal. Eduardo said, "What is the best way to store cryptos to get hard forks and for security, and how do you do it?" The best way to store cryptos for hard forks and security, they're pretty similar. Pretty much any hard fork is going to have a mechanism for you to be able to do a swap. But sometimes, like the Ledger Nano S or the Trezor, they'll basically include built-in support for being able to take advantage of the fork. But as long as you have your private keys, then you can figure out how to get coins credited for those forks no matter what. If you don't have your private keys, if you have your coins on an exchange or something, then it's up to the exchange for determining whether or not you have access to that fork. So you'll have to see in terms of whether they support that particular fork or not. Pretty much all of them ended up supporting Bitcoin Cash, even if it was really late. But if you really want to make sure that you're getting access to those forks, then you need to make sure you have your private keys for whatever funds you're looking for getting that credit with. Jan said, what number do I have in mind for Neo this alt season? I'll answer this in general more so than Neo. I would say be prepared if we do have a true alt season. It's hard to say. I mean, a lot of people I've seen have made 4 to 5 times their total Bitcoin value over just the past month or two, which has been great. So whether we have another week, another month, another 2 months, it's hard to say. It depends if alts and Bitcoin end up going up together. But I would say for any target, for all of them pretty much, even though it seems absurd on a lot of them, it's possible for them to match their prior all-time highs relative to Bitcoin. We've seen several go beyond that. I think the Stellar move was an example of one that was very surprising. It not only hit the cloud top, which was my kind of like last target, then the prior cloud, the ledge, if you will. It went well beyond that. It went past the prior peak. It went past the all-time high, and it hit this crazy trend line, which I don't think should be the standard. And, don't get too selfish. If you do catch a 5X or a 10X, consider profit taking on the drawback. The other thing you could do is consider how many legs has it had. Another thing Johnny said on the podcast today, which is going to be going out in the next day or so, was talking about how many drives has it had. So if it's the fourth drive, then it's probably going to pull back, but you might get 2 or 3 legs out of a trade. So look at it in that perspective as well. Dan said, from a macro perspective, how do I assess the overall health of the crypto asset market? What things do you look at and consider? Nick Pispie said this well, I think, on a previous podcast, and he was talking about if we start seeing new user adoption, like new people coming onto exchanges in a much slower rate than it has been, that's a potential sign of Bitcoin being bearish. I also just look at general sentiment. Like, I get worried if like too many scams are successful. I feel like some of these things should resolve themselves. Like the good projects should go to the top. It does worry me when a bunch of stuff that has no fundamental basis is just pumped because it can. That's a current sign that's going on that tells me that the bubble is a little more out of control than I would like it to be. But there's so many things that you can look at in terms of a macro perspective, whether it's charting or whether it's fundamental stuff. But the slowing of new user adoption is a really good one, I thought, that Nick said. So check out that episode. Henrik said, if I could choose one favorite Ichimoku trade setup, which one would it be? The TK recross, the Kumo breakout, or an edge-to-edge trade? I'm so accustomed to trading the cloud and downtrends that looking for a move from way below the Tenkan or the Kijun up to the Tenkan or the Kijun, so the price is below, and I'm looking for it to go back to it. I think that's actually a interesting setup. Another one is the edge to edge, which we've seen a lot more of recently. You can see on this Stratus one-day play, you would have gotten in the trade here on an edge to edge, and then you would have maybe exited it here, or maybe you'd still be in the trade. Just kind of depends. These flat tops, there's another thing Josh says all the time, tend to be like a magnet, so the price goes to them. But these edge-to-edge trades over the last couple of weeks, I've entered several of them. Sometimes they fall out, sometimes they don't. It really depends. Edge-to-edge trades are really great. The TK cross is when the blue line crosses the red line. When you're on doubled settings, the TK cross could be pretty late. So you can see on this one, it had already, this is at 64K, yet the bottom was 40K. So it already gained 50% before the TK cross happened. One of the ways that you can get around this potentially is to actually speed up your settings. And this is going to have more inaccuracy, but it's going to catch these trend switches quicker. And you can see on one like Stratus where it had a really defined view. This TK cross here happened at, closer to 55K. So it gave you a little bit more of a heads up. Not necessarily a ton, but sometimes you want to look at singled settings for that reason. You might be able to get a quicker entry if it's from the bottom. So you might enter the trade a little sooner than it actually becomes an edge-to-edge trade. That doesn't always work. It really depends. Here's one that's been a little bit of a disappointing one. In this case, PTOY's or Patient Tory's fundamentals are not great. But in this one, this diagonal resistance aligned really well with entry to the cloud. So that told me that resistance to get into the cloud was pretty strong. So I considered my options here in terms of selling and not selling. I ended up holding on to some. And you can see it kind of dumped below. I got rid of the rest of mine somewhere in this region. This has still got edge-to-edge potential, but to me, it's also still fighting some of these other elements. Maybe this is a trade worth entering right now. You're above the 100 EMA. The 200 EMA, even though it's tiny, is going to provide some resistance here. This is the type of thing that eventually, maybe this will hit 8K again. Maybe there's a double in that trade. I don't know. That's not as good of a edge to edge as I would like. Sometimes they're really great, but this is a common type of trade that I might look at. All right. Next question is Matt said, you mentioned you like to sell your alts before Bitcoin pumps so I can time the cycle and buy more alts during the bleed. Can you give insight on that? I think I pretty much answered that question. I say that more in a macro sense. Like, I didn't sell anything with all this Korea FUD happened. overnight because I'm still bullish on altcoins right now. So for me, that wasn't really worth selling because the trends were mostly intact. And again, because I'm in as many alts as I am, going and selling them all only to sell right before the bounce was a little harder. And as often happens with that kind of news, it ended up really not being as true as it looked at first. Wayne Street Ledger said, how do I find small coins before they rise in price? It's hard to look at each chart of coins with the amount of coins out there, and it's hard to find the chart. I'm not an expert at this. There are people that find coins that are like $10 million market cap, $20 million market cap, which nowadays is pretty small. That type of research is pretty tough. What I do is I try to find a coin that will be not massive. Like trading $1 billion market cap and expecting it to 5x is a lot harder to me than finding a $50 to $100 million market cap that might 5x. So I kind of like that mid cap range. It also better fits with the type of trading that I do, which is multi-week to a few months is kind of my sweet spot. But sometimes I'll be in a trade for like 4 days. It really depends. But yeah, finding those small bags can be really tough. Coin market cap searches, Bitcoin talk, threads. That's if you really want to dig down into the weeds. The other thing you could look at is just follow some of the people on Twitter that really specialize in small caps. My buddy Ethereum Addict does well with this. Macho does well with that. Sometimes his are also like staking coins and stuff. Same with Coin Shark, I think is his name. There's lots of small cap folks on Twitter that do a better job than I do. Not So Fast is always the master of the small cap. And he goes and he mines his bag early, and I love his strategy. Colby said, hey, I'm a noob here currently on Bitcoin trying to learn as much as possible before jumping into alts. If you were new and wanted to spread your portfolio between 4 or 5 alts, which ones would you start with right now? So basically, what would I buy right now if I could? I can't tell you that per se. What I would say is the easiest strategy if you're new to technical analysis would be do something like turn on that 200 EMA and go see what's close to it. And if overall it looks like a good trend, you don't have to buy the absolute bottom. You don't have to sell the absolute top. So find something that's in an uptrend but isn't towards what looks like the end of the uptrend. Look at the history of the chart. Find some older coins maybe that have a better history and see if you can trade them that way. Jamie said, have you ever let FUD or FOMO get the better of you when trading and it's led to a negative scenario? Of course I have. I've sold on bad news and then the bad news didn't matter. I've bought on FOMO and then it retraced on me. Someone dumped on me. One I will admit to that really annoys me was, and it was a small amount of money, so it's not that big of a deal, but it was with Mothership. I was so sick and tired of all the shilling on Twitter that I bought a tiny bag of it just so that the shilling wouldn't bother me as much. And I pretty much bought the top. And then I rage dumped it after it lost like 60% or something. I was just sick of it because I saw the good setup with Doge around 20 sats. So I just dumped it and bought Doge. And I think I don't know, I got a 3x or so out of Doge, but then I also basically sold a week before the bottom of Mothership, and now it's probably close to my buy price. I don't know. But yeah, you got to be careful with that stuff. At the same time, like sometimes you just got to be, if you're going to dump when your pattern breaks. Don't necessarily dump when it hurts so bad that like you just can't stand it anymore, because by that point, if you hit like 60%, 70%, 80% retracements, you might be closer to the reversal than you are to really saving money. A good example for me was there were several coins where in December when CBOE came out, they really just put the smack down on altcoins when Bitcoin did that final drive. And like that was depressing for some of those that seemed to have retraced beyond repair. And what was amazing was that the spike off of that was just drastic. Like people, it just seemed clearly like a local top for Bitcoin. And the money that flooded into altcoins was so great that it would have been really damaging had I sold those positions that were most punished at that time. What I did instead, as soon as there were signs that there were reversals in play. Because I didn't want to get, my price on some of those was still pretty high. So I actually bought the crap out of some of my own blood, they'd gone down so much and it was driving me crazy. So I just bought them when they were still really low, but they were showing those early signs of reversal. And that lowered my average price, which gave me more comfort when I did sell some of them, that I was selling them in profit. And that's more of a mental thing. Like I could have just dumped those and played something else. But they were still, that by that point, they were good setups. So it was the right thing to do. But yeah, you really don't want to get stuck holding somebody else's bag. So don't FOMO too hard. Yaru asked me 3 cryptos trading below $1 that have the capacity for 1,000% with a winky face. I'm glad that he's joking. Not going to answer the question, although it is worth noting those coins under $1 are doing quite well. That's unfortunate new mentality, but that's what it is. Marcel said, with currently alts going through the roof, I'm afraid Bitcoin will ruin my good streak. And that is a worthwhile concern. So yeah, you need to be acknowledging the fact that Bitcoin can come back and destroy this miniature alt season at any time. He says some people say alt season just started, and he finds it difficult to see the larger perspective. The truth is nobody knows for certain, because these are dynamic markets that are impossible to predict with 100% guarantee. Nobody knows for certain that alt season is new or like just starting or almost over. So I think that's why that inflection point with Bitcoin is going to be important, and finding out when that happens, whether alts continue to have this streak or if they reverse and go down. But altcoins haven't always had an inverse relationship to Bitcoin. So you just got to be careful and shape yourself to the market. Personally, that's why I want to have fewer positions when it gets closer to that point, because if I'm making adjustments to what Bitcoin's doing, then I need to be able to do so quickly if possible. Anthony asked, while trading different exchanges, how do you handle security of coins? Is it practical to use wallets for the money that's being traded constantly? What's advice to stay safe with your money? If you're not trading your coin, like if you're holding them for weeks and months, then it is safest to put those on a hardware wallet or on the coin wallet if it's a trusted coin where you don't think there's malware on the coin on your computer. Sometimes you can also take advantage of staking if that's the case. If not, the other thing you could do, I get a little nervous when people say they only trade on Binance or they only trade on Bittrex or they only trade on Polo. Because if one of those shuts down, goes out of business, gets taken over by the government, who knows what, then you don't want all of your trading stack in one place. A lot of the old school guys that have been through this, where these markets have shut down, they trade on all the exchanges, because if one goes down, they don't want to go down with the ship. They want to still have a majority of their own coins available to trade. So I would say diversify the exchanges that you're using. And if you're not trading certain coins regularly, then get those off the exchanges and make sure you own those coins and keep them either in a hardware wallet preferably or a software wallet if that's your only option. I think I'm gonna end it with that one. So I've got more questions. There's another page of however many, 20 or so questions, but that's good for today. I hope y'all enjoyed this. That's where I'm going. So let's stop there, and we'll do this again soon to answer the rest of the questions. I'll look back later to figure out how many I actually answered, although I think it was around 15. So y'all have a good day, and we'll talk to you next time.